Just before we hit record, we were talking about John just has a 6-week-old, and I want to hit record before we talk about this because it could get funny. That is the best way, and I think Dan will agree with this. That is the best way to describe what being a firefighter is like. It's like having a 6-week-old baby forever. Forever.
Yeah.
You never sleep. You're up at 2 o'clock, 3 o'clock, 4 o'clock in the morning, and you're trying to recover the next day. I think, Dan, you had a rough night again last night, right?
Here's the thing. We got to caveat this because we get so much, John. Like, we have a very, very cool schedule in a lot of ways. We work 100 days a year in our contract. So we have 265 days off. There are nights
Dan, don't tell people this. Come on.
I'm doing it, dude. We're far enough in. We've built enough trust with the audience. We're going to fucking level with you folks. There are nights where you sleep straight through the night. This is what makes calls at night so painful, especially when you're a new dad. Is you're sitting there, you just slept like shit for 2 nights because you have a baby, and you go, I could get the best sleep of the week tonight. I could do 9 straight hours here at the firehouse, or I could sleep 0. And that reality is part of the reason you sleep so bad, though, is because you know that these red lights and these tones are about to go off and you're going to have to rush off. So, yes, you're right, Josh, though. We signed up for something pretty fucked up because it is kind of like being a first-year dad every third night for 30 years.
Yeah. So I got something that I think you guys will appreciate. Besides this T-shirt, which is a New York City Fire Department T-shirt, nice. My uncle is actually a retired firefighter in New York City. So he's gotten me some swag over the years. I figured today was a good day to wear this one.
Repping it. We'd love to see it.
But in addition to this shirt, I got I heard this from my uncle, and it's this funny how this is coming up related to babies. He was saying that he noticed the younger guys at his firehouse, when they were younger, single or married, but with no kids, they would always be like, either right on time or like a little bit late for their shift, like, cutting it very close, right?
Yeah.
But then he said when they would have a new baby at home, they were like, 15 minutes early, or like always like getting to the firehouse a little earlier. And he chalked it up to like, yeah, it's because they have absolute madness in their home right now. They're like, I'm going to go to the firehouse. I'm going to do 15 minutes early.
For
and
sure.
He said it was a trend that just kept happening and happening.
There's so many times when I have a project, like in the last week, I've been changing out all the doors and trimming my house because I've been here for like 3 years. It's time to do it. And I've been putting in like 8-hour days in my house, like busting my ass. I'm like, I need to get to the firehouse where like I could, do some training, chill for a while, go on a call, eat some lunch. Like this work at my house is real fucking work. The firehouse is pretty chill, like I need to get there. I totally understand that mentality.
It is a reflection too of just how fun the vibe is. I mean, it is as fun as you might think it is for the listener, or you've seen a TV show or whatever. I mean, shift change in the morning at the firehouse is really fucking special. It's hilarious. It's basically a sitcom. And when it's mayhem at home and kids are screaming, you start to be like, that is pretty fun over there. And there are quiet days. There's days that absolutely kick your ass. The shift I had yesterday was literally nonstop. Almost for 24 hours nonstop. But then there's other shifts where it's just like, whoa.
I know that's true too, because I was texting Dan a couple of things about what's going on with this podcast. I didn't hear back from him for like 4 hours, and I'm thinking, Sunday at the firehouse, and he's not answering. Like, they must be slayed. They just got filleted open all day long.
Yeah. To your guys' point, it might be mayhem at home with a little kid, but when you're a firefighter, maybe it sounds nice to rush into the firehouse for your shift. But you guys might some days be going from mayhem at home, right into mayhem at the fire department. So that's a tough one.
But you're doing it with a group of people that you really love and trust. I mean, that's what makes any kind of misery fun. Like anyone that's been on a canoe trip, camping trip, backcountry, pick something in your life. That can either be the worst experience of your life or one of the best. And for us, we get to do all this crazy shit with guys that we, for the most part, really, really like being around.
That matters a lot, for sure.
Hey, we got rigs moving in the background, by the way. I just heard some sirens.
That's just Dan's got a button on his keyboard to do that.
Yeah.
This
what a
is
nerd.
New York City sounds. It's funny you said that. Like, I'm so immune to it. I don't even notice it.
Yeah.
I noticed it too.
Dude,
I want to, dude, before we
yeah, go
do
ahead,
this,
Josh.
I wanted to, so I was listening to you on Simply Bitcoin, John, and you were describing your background and journey prior to Goldman, even like in the 2008 great financial crisis. And it's very similar. There's a lot of parallels to like what I had going on, because back in during that period of time from like 2003 to 2012, I worked at a big financial company. I was a blue collar dude there. I built furniture and cubicles, and like basically we were the ones. There was a small team of people on this huge campus. It was actually Discover Financial, and it's in Chicago. In that building, Morgan Stanley owned them at the time. And I had free reign of these buildings because I was just like the fix-it guy. I'd walk around and I knew a lot of people all over the place. So I had the ability to walk around and talk to some of the people that had what people thought were great financial minds at the time. The whole world is collapsing around this thing. Like, people are getting fired. They're doing layoffs. It's wild. And I'm talking to some people in Morgan Stanley who I think, like, these guys must know what's going on. They must have a real good read on this. These are the financial experts, right? And I have like access to these people. What a great fortuitous thing. And talking to these guys, I quickly realized, like, not that I had any deep insights in finance at the time, but they didn't know what was going on either. Like, everybody was kind of like, they'd give you an answer, but I would think about it and like, it doesn't really get to the fundamental problems here. At least I didn't think so. And that kind of started my journey into finding Mises.org and Austrian economics, and then being very infatuated with gold for a long time. From like 2007 until 2015 or so, I think I mostly sold most of the gold in 2015 that I owned. It was just an infatuation with what is the fundamental problem going on here. And in my assessment of it, it was the monetary system itself. And mistakes were made by me at the time, and I think a lot of people, everyone thought this could be the thing that finally does cause a turnover of this monetary system. A lot of Austrians in that period of time thought that. And like many times in finance, the old saying that you can be right, but you can be right at the wrong time, and it doesn't really matter. So it's just interesting the way that parallels. The other thing about working at a huge financial institution like that, and I want to hear your thoughts on Goldman in this aspect. They brought in hundreds, I'm talking hundreds
of midgets.
Super hot midgets, hot interns in the summertime while I'm in my early 20s, with free reign to the entire campus and a really, really nice fitness center at lunch to go to spin class. That was the best reason to work at that place.
And the midgets.
And
the
midgets,
target.
Yeah.
So this, you're talking.
We'll get to that. We're getting to the midgets.
Pre-financial crisis, Wall Street. So you actually saw a little bit different Wall Street than I did. I started in 2009. That's when I graduated college. So like right after the financial crisis. And a place like Goldman still had the reputation at that time of like this really prestigious Wall Street bank. Like, everyone's a genius that works there. They work on these fancy deals and make amazing investments. And it still kind of had that. It still does have some of that, but I think it's fading over time. But in terms of some of the excesses and like things they would spend money on, a lot of that got cut off after the financial crisis. So you actually have a perspective, and I would hear stories from people, but I
actually have stories. So at Discover, prior to the financial crisis, they had a Christmas party they would throw every year. It wasn't as opulent as throwing midgets at Targets or anything like that. I wish that was there, but I mean, they spent millions, and I'm talking multiple millions, on a Christmas party every year. They had ice sculptures brought in that they would put shrimp on. They had like the entire campus was turned into a giant party. It was cool. They had go-go dancers. They had like giant buffets. People were getting completely shithouse drunk and having sex in closets. Like, this is not this actually happened. Like, I didn't see the sex, but I saw and heard about it, or I just heard about it, but it was wild. And then after this is 100% true. They hired taxis to line up and drive everybody home, which was a really nice little perk. After the financial crisis, gone. That party, gone.
So not only was it gone from a spending perspective, because they were like, hey, we almost went bankrupt and we've got to cut our expenses and all that stuff, but from a reputation perspective, that was huge at Goldman. Like this part I experienced. They were literally telling us, like, room full of people who just joined Goldman for the first time, be really careful when you're out in public, like literally telling us not to like be on the subway or out on the street talking about how you work at Goldman because the spotlight's on you guys now. You know, we had our executives being grilled by people on Capitol Hill, and they were like literally like keep a low profile. So all of that pre-financial crisis stuff completely switched. Our holiday party was like a table that they rolled in within the building that had like beer and wine on it, within the building. Like that was the holiday party in like 2010 Goldman Sachs. So
Sounds very
everything
similar.
completely changed in just a year or two.
Did you hear stories about what that holiday party looked like prior to that? I'm curious if it echoes what I saw.
100%.
Yeah.
Yeah. All the people that were there and a little bit older, they were just laughing to themselves. Like, I can't believe that we're just like in the auditorium with each other now, like drinking a beer. Like, this was crazy 3 years ago.
Well, at least I can still fuck the secretary. There's always that.
Yeah.
Just can't do it at the holiday party.
Glass half full perspective. So I can already sense, and having read your pieces, which are really good, we're going to link them in the notes. One of them is how legacy finance perceives Bitcoin. And we're going to do a fair amount of ripping on Wall Street and being a little bit too cool for Wall Street. It's popular in Bitcoin to be like, these guys have no clue what they're doing, and we've figured out the solution, which is maybe largely or partially accurate. But I want to start on a slightly different angle for you and ask you, what did you take away from 13 years at Goldman Sachs? Because the people that work at these Wall Street firms, they are not idiots. They're wildly intelligent. They have access to a tremendous amount of tools, whether that's fair or not. And they are doing high level analysis that is often productive. I know that they have access to a spigot. Many people don't. But let's go to the side of what did they do right? What did you take away? What would you advise people in Bitcoin to pay more attention to about how some of these legacy big boys make their way around?
Yeah. So you said something that I was thinking, which is there are a lot of things, these people who work on Wall Street, but they're not idiots. They are high performing people. They can execute like crazy. They know their particular industry, the details of that industry. They could talk for a long time about a particular industry and like just be incredibly impressive. They know all these details. But the takeaway for me was, even though they know all of these details about a particular industry, it doesn't mean that they, one, can know where that industry is headed in the future. Because it's one thing to be able to talk about your industry, what's happened in the recent past, what's happening right now. It's another thing to say, what is this industry going to look like in 1, 3, 5, 10, 30 years? So forecasting is difficult, even if you're a quote unquote expert about your industry. And then number two, they don't really look beyond their little niche within Wall Street and try to examine the system as a whole. So those are like two huge takeaways, but it is important to remember. So this, like, you get slapped in the face with this reality a few different times. Like, the housing crisis is obviously one of them. And Josh, you nailed that. Like, you're asking these people, oh, they work at this big financial firm, like they must have a good idea of why this is happening and how it's going to get resolved. The answer is no, they don't. But another one I could give people that I saw firsthand was 2015, 2016, which we called the energy crisis, because for companies that worked in the energy industry, it truly was a crisis, because the oil price went to like $30 a barrel. And all these companies were positioned for oil to be like, above 80 forever. That's like kind of what the thought was. Oops. So, but what's amazing about this is you could have talked to an energy analyst, and not just at my former firm, but like across Wall Street, and just said, hey, give me a data dump on everything you know about the energy industry. And this person could have gone on for hours about oil fields around the world, how much it costs to extract a barrel from every oil field, production by country, active oil rig counts around the world, different data releases and when they come out, E&P, that's exploration and production companies, like how much they're spending on CapEx and how that's going to flow through, OPEC statements, how the energy industry is being regulated. And you'd hear all this. It's so much more than that too. It's like how much debt and equity each company has. Where's the debt trading? Where's the equity trading? All this stuff, right? You would hear them and you'd be like, this person knows everything about the energy industry. And they are a true expert. But then what happens in 2015, 2016? Did they see that? Did they correctly forecast that oil was going to drop to $30 a barrel? And all of these companies were going to be in this massive, stressful position. Some of them got downgraded from investment grade to high yield, which is a huge deal. Some of them just straight up went bankrupt. Did they see that coming? No, they didn't. Like, we had some of our largest overweights were in like offshore drillers, where the cost of extracting a barrel of oil for them is the highest in the industry. They need over $80 a barrel oil just to be a little bit profitable. So the reason I go into all that is just because these people, just objectively speaking, they could talk to you for hours with their knowledge of the industry and it would be super impressive. But that doesn't mean that they're going to correctly forecast what the industry is going to look like a year from now or 5 years from now.
Yes.
And that has just really slapped me in the face over and over again working on Wall Street.
Folks, when a fellow firefighter, family member, or friend asks us where we buy Bitcoin, we point them to Swan. It's the place Josh and I have dollar cost averaged into Bitcoin for years. At Swan Bitcoin, you can set up automated Bitcoin savings plans as well as execute instant purchases. They serve clients of any size, from firefighters to institutional investors, and an account is startlingly easy to set up. I've watched a fireman do it on a smartphone while sitting in a recliner in less than 7 minutes. Swan also offers Bitcoin IRAs. You can start or roll over a traditional or Roth IRA with enterprise-grade custody, attentive service, easy onboarding, and transparent fees.
Have you had the intention to mine Bitcoin but thought that the equipment is too expensive or that running your own miner might be a bit too technical? Maybe you thought it would be cool, but the cost of electricity where you live makes it pointless. With HeatBit, you can kill 3 birds with 1 stone. It's a Bitcoin miner, a heater, and an air purifier all in one. It's a plug-and-play device that could not be simpler to operate. It has the latest 5nm chips to make it one of the most efficient Bitcoin miners in the world. On average, the HeatBit Mini pays for 70% of the electricity it uses. The HeatBit Mini also operates quietly. Good luck selling the idea to your wife that you're going to plug in Bitcoin miners in your basement that operate at the volume of a lawnmower. Not going to happen. HeatBit operates silently while keeping your significant other warm and cozy. HeatBit cares about your marriage. So, if you want to mine Bitcoin and remain married, order a HeatBit Mini and keep warm while it pays for its own electricity bill. Visit heatbit.com and use code BCB for 5% off a HeatBit Mini.
One of the parts of your piece and something you just alluded to that really resonated with me was hinting at the cautiousness that needs to be exercised when you're really, really specialized. And this is going to parallel parts of all of our lives, right? Just because you know one niche area in tremendous depth, and that does add value. Like at Goldman Sachs, you need experts in a bunch of different fields, but there are people that get buried so far in the weeds that we take for granted they don't actually have an awesome 1,000-foot view. Like an analogy I could draw is that a podiatrist who's 15 years out of medical school is not going to be nearly as good at general diagnosis as an ER physician. They're in one specific lane. They're not exercising those skills across a wide spectrum. And it makes me think of a story from my life, which is probably going to sound adorable to you and people that actually work on Wall Street or in finance. But I have a very good friend that once said to me, he's a very successful trader. He said, we were talking macro, and he made the comment, "You probably know more than I do." And I was like, what are you talking about? And this is someone that does respect my take on a lot of things and knows that I spend, realistically, not to exaggerate, through the years, thousands and consistently, because of this podcast and my interest, just regularly intaking more broad view macro info. And I'm like, there might actually be some truth to that. As crazy as that sounds, he's very, very good at a fairly specialized sector in credit. And he has a family. He doesn't have time to take in all this. So the point there is giving tons of credit to somebody just because of their title or the organization they're associated with depends on their role. Maybe if it's Jurrien Timmer at Fidelity, he's kind of paid to think as big picture as possible, take credence to broader macro views. But if it's somebody that's really stuck in a specific, derivatives area, hedging strategies, some specific form of financial modeling, that person may not have as good a read on the macro picture as Joe Blow, who spends a lot of time on it.
Well, also, they might not have been taught. I think you touched on this either in one of your pieces, John, that I was reading, or in one of your interviews. But a lot of people never got like a baseline understanding of what the monetary system is or how it works. Like a lot of finance econ degrees don't have that information. And once you have reached a certain plateau in your career or in your schooling, you don't want to rip everything down and go back to first principles and start all over, because number one, it doesn't really make you any money. You're not really incentivized to do that. And number two, that means that your entire worldview and everything that you've built to that point is just potentially thrown in the garbage can, especially from their perspective. So there's two very strong incentives that keep people that are high performer, very intelligent people that are very successful from moving their way back to maybe the very foundation of this whole thing is somehow off. But I don't want to know that. And I don't really genuinely need to, because it's working for me anyway. So there's a lot of friction there, I think, in moving back and trying to understand this from first principles, which is very, very necessary for you to come to the conclusion that Bitcoin is such a magnificent piece of work that it just has to be appreciated from that beginning. And I think that's why I was very lucky to be in that financial realm at the time without all of the financial education, because it allowed me to not have any of those monkeys on my back. I just started from like, let's find out who actually knows these things. And Mises was a great place to start.
For sure. Fresh eyes is very valuable in these types of things. And Dan, you brought up the analogy you could draw to people in the medical field. And I think that one is super powerful for explaining what goes on in the world of Wall Street and finance. And it's funny, the example you've used, like I've used a similar one. If you need to have your hand operated on because you broke a bone, like you need hand surgery or something, you want to go to a hand surgeon who's been doing hand surgeries for 10, 20 years, whatever. That's the person you want to go to, not a generalist. But you wouldn't get the hand surgery and then start asking the hand surgeon, like, hey, can you give me some tips on optimal diet and,
I've
sunlight?
got this rash right on my thigh right here. Can you look at that?
Yeah. And like, it sounds ridiculous, right? But we kind of do that because when we're like, oh, they're a doctor. Like they know about nutrition and sleep and light and circadian rhythm. And the analogy is it goes deeper, because the same thing with finance. Even the people within the medical community, like it may be obvious that we shouldn't be asking the hand surgeon about nutrition once you really think about it. But then even the generalists within the medical community, I think we probably all agree that they don't do a good job of letting people know what is the proper diet and sleep and light and circadian rhythm and all this stuff. And the same thing's true in finance and economics. If you go to the guy who's the energy analyst and he can tell you all this stuff about the energy sector, like you shouldn't be asking him how the monetary system works at a fundamental level, because he's never really thought about it. But then even when you go to the people, the economists who, Ivy League educated economists, I think they're not really, the mainstream answers they give people are not really sufficient either. And yeah, just on your point, Josh, with the people who, if you bring up these fundamental questions, if I did with my colleagues at Goldman, which I did many times, so I'm speaking from firsthand experience here, you would get, I think, two big groups of answers from people. If you started to say like something crazy to them, like, hey, have you ever heard of Austrian economics and, sound money and how the monetary system would work under a gold standard, how it did work, you would get two big categories of responses. One would be kind of pretending that they know that it's bad. They're like, oh, we're like enlightened. We've moved past that. Like having the central bank is a good thing. Like, thank God for the central bank. Or you would get someone, and by the way, on that first one, they couldn't go deep with you on like the history of money. They're just kind of repeating things they've heard. The other one you would get would kind of be apathy from people. They would look at you kind of like, dude, why are we even talking about this? We manage bond portfolios and like, you're not going to change the financial system overnight. And like, don't you just want to come to work and do a good job and get paid and go home? Like, why are we even talking about this? So that's kind of how people look at it. It was really hard to even get people to care about the financial system and like the underpinnings and these fundamental arguments.
Yeah, your boss went to a meeting afterwards. He's like, "This guy John, I think we're gonna have to get rid of him. He's asking too many questions."
He's trying to be a think boy.
There is a message there to us in Bitcoin too, of everybody kind of gets trapped in certain groups and starts just repeating hollow tropes. Think about the things you say about Bitcoin. Do you actually understand what you're saying, or are you just regurgitating what somebody said on a podcast last week?
That's 100% true. We need to be mindful of that. Like, you don't want to become the thing that we're criticizing, for sure. That's important. And then the other thing I do think it's important to note in this conversation is we're kind of talking about how the experts can be wrong. And that is true. They can be wrong about like really important topics that they're supposed to know about. But you still don't want to take a blind rule going into any situation and say, oh, therefore this expert said this. Now I just don't believe him because I don't believe experts. That's also not a good rule to apply to
Speaking
things.
of experts, I was paying a lot of attention to Bernanke and what he would talk about, especially during that period of time. And he would be making a statement, and then within weeks, he would be proven 100% wrong. Like, it was so absurd how quickly, like, he made confident statements about how the financial crisis or the housing crisis is not going to move its way into, or it's the subprime is contained. I think that's what he said. And then weeks later, it blows up. And then I can't even think of the other ones off the top of my head, but he was proven wrong so quickly, so often during that period of time that it's amazing people still took it serious after that. It really was.
I do love that piece of nuance though, John. Absolutely love it. In that you can't go so far in one direction that you don't have your eyes wide open. There are many areas of life where you need to trust experts. In our field, I don't know what analogy to draw here. If you have ventricular tachycardia and you're lucky enough to still have a pulse, you may be too cool for it, but if we don't give you amiodarone and probably cardiovert you, you're going to go meet your maker. You know what I mean? If you have lymphoma, you're going to need chemotherapy, or you're going to go meet your maker, just to draw some medical analogies. And so I know that finance isn't a perfect science, but to just completely disregard, for example, let's go the most dogmatic, anybody who doesn't understand the value proposition of Bitcoin is completely naive. It's not like academia is totally worthless as much as we shit on kind of mainstream higher ed within Bitcoin. I just think I like that you brought that through and you made that comment in your writing and you made it here of let's be careful not to draw a completely black and white rule and totally disregard everything they say, but let's approach their ideas with the same degree of skepticism we would anything else as thoughtful thinkers.
You know what really bothers me, and I think what bothers a lot of people who start having this disregard for expert opinions, is the way that they present them so pompously, as if there is no alternative and they are 100% right. Like, science and academia has gotten so sure of itself that it's lost the plot in a lot of ways, in my opinion. Like, there's no, like, when COVID was a good example. When people are saying things like, trust the science. If you fucking think that the phrase trust science is antithetical to science itself, that is... That just blows my mind, because science is the idea that you're supposed to question everything down to the most fundamental levels. That is science. Science isn't some magical wizard that just is right all the time. Like, the history of science is filled with people that were 100% wrong, but had a good trajectory, and then someone else filled in the blank. And then we branched off to the correct path because it was proven, or, as close to proven as we can get. That, I'm just my little diatribe there for talking shit.
For sure. And I feel like they adjusted it at some point to, it was trust the science or follow the science. And follow the science is not really much better. It's like, now I'm just like a follower, and you just like tell me what the science is, and I go.
And then if you question anything, you are slammed it's like a gopher popped out of a hole and you get hit with a sledgehammer. Like, that's not how science is supposed to work.
Yeah. On the bright side, I think the financial crisis, there's so many Bitcoiners that trace their roots in learning about economics and the monetary system to the financial crisis. Whoever Satoshi was created Bitcoin, like, that was a huge motivation for creating Bitcoin. And then to your point, Josh, just about COVID, obviously not financial related, at least directly, but I think that did open a lot of people's eyes to say, okay, maybe I shouldn't just believe what this person said on the TV.
For sure. Huge move forward. And there is a massive increased dose of skepticism in society in general towards the powers that be that overall I think is a healthy and a helpful move. I want to get into your thoughts on just Wall Street's general perceptions of Bitcoin. Let's start with where you think legacy finance, I know that's a huge, wide term that we kind of are throwing out, and it's hard to even know what that means. But if you were to try to describe where you think most people in legacy finance are in their understanding of and interest in Bitcoin currently, and then maybe let's get into trending the change in tone that is very obvious to us and maybe less obvious to them.
Yeah, maybe at a more microcosm scale, like some of the contacts you still keep in contact with on Wall Street.
For sure. So I would say, firstly, I think it's easier to describe what the common retorts were 5-6 years ago. It was Bitcoin's a scam, Bitcoin is a tulip bubble, and it's just not going to last. And, Jamie Dimon has the famous quote, anyone who buys it, I would fire them, or whatever he said, something like that.
Yeah, he did say something like that.
Yeah, so that was kind of what everyone repeated back then. It was just like, you're an idiot if you get involved with this, like you deserve what's coming kind of a thing. And fast forward a few years, and 2021, ironically, the Wall Street really only feels compelled to talk about it during times of price appreciation. I think that's mostly true, but when the price was collapsing in 22, they did talk about it. But I guess my point is, like 2017, you heard a lot about it on Wall Street. Then price collapsed, and you didn't really hear much at all from like 2018, 2019. Then like late 2020 into 2021, they feel kind of compelled to have a view on it just because it's like this hot topic. So in 2021 and 2022, the talking points became, okay, well, Bitcoin has grown and it didn't go to zero. So I guess it's not a tulip bubble, but it's really correlated with the NASDAQ. And, if you could just buy QQQ, why would you buy Bitcoin? And it's really correlated with Fed policy. So, you could just make other investments based on your views on Fed policy and you don't need Bitcoin. And like there's like a tiny hint of truth to that, where like, yeah, there are some investments you could make that are correlated with Fed policy. And if you time them right, like you'll do well, fine. And they directionally move as Bitcoin moves. But there's no recognition from them when they say, okay, I was the guy who 6 years ago told you it's a Ponzi scheme and a tulip bubble, and now I'm telling you it's correlated with tech stocks. Like,
Exactly.
That is a complete jump, and like your prior thinking was wrong, and there's nothing wrong. You're allowed to change your mind, but like, can we just acknowledge the massive leap that you guys have now made in this? So they don't really have that, and so their critiques, a few others that they say, they still think like the government's going to shut it down to some degree. They'll be like, oh, how is the government going to allow this? I hear that one a lot. Go ahead.
Sorry to interrupt you. What you just said, something to think about with human nature. Whenever you find that somebody was completely wrong, it's a very rare person that will ever admit it, because it's not that it's a lot of times that they don't even remember it, because people don't like to remember being wrong. You know what I mean? It's almost like a gambler who always tells you about their wins, but never tells you about their losses. It's one of our weaknesses as people in general. Like, we never talk about our dumb ideas after we made them 5 years ago or 2 years ago.
Have your guys' wives ever? Have your wives ever reminded you of something that you said and you're like, "Holy fuck, I did say that." Holy shit. And it's like you completely blocked it out of your head.
You did.
That happens for me from time to time, where it really is like selective amnesia on the dumb shit you say.
Yeah, this is a human nature thing. It's true. So yeah, I think we do need to, all these criticisms and we might be correct in using these criticisms with people, but we definitely do need to remember we may have done this ourselves in other areas of our life, or we might do this in the future with Bitcoin. Like, we might have some take about Bitcoin that just turns out to be very wrong. And it would be good for us, I think, to admit that to people.
For sure.
If you want to keep your reputation, right? Like, you don't want to be that's like long-term greedy, in my opinion. There's that phrase like long-term greedy, right? It's like something might not benefit you in the short term, but in the long term, your followers, people you communicate with will appreciate if you can admit that you're wrong. They will have they put more stock in what you tell them going forward. So
exactly.
Yeah, might be hard to do, but
sorry to interrupt you. Continue on about their
All
transition?
good. Yeah. So the other thing that was really difficult for Wall Street it just threw a total wrench in their potential understanding of Bitcoin is all the things that happened in 2022. So from Celsius to Voyager to BlockFi, whatever others, and then culminating in the FTX collapse. This introduced so much confusion. It's frustrating because I had conversations with people within the last 6 months. And one example, caught up with a guy who's been working on Wall Street for 25 years. Great guy, one of my favorite people that I worked with. Just even though I don't work at the company anymore, he's still there. I'll catch up with him every now and then. And mostly we talked about what's going on at the company, who he's working with, just like catching up, shooting the shit. But then at the end, I couldn't help. I wanted to know. So I'm like, by the way, stuff that's happened in the last 3 years. COVID, the response to COVID is the Fed's balance sheet increases by $3 trillion in the course of 3 months. We add, X amount of debt. Inflation is kind of going crazy. Russia gets cut out of the financial system. The Canadian trucker protests. These people are protesting and having their bank accounts shut down. I was like, you just look at all that. You're obviously aware these things happen. Does any of that make you think that a neutral, digital, fixed supply monetary asset outside the system controlled by governments and banks might have some value? And his answer was, he definitively said no. And what he cited was, and after seeing all this stuff that happened with SBF and FTX, I'm even more confident about that. Wow. And I know you guys are just probably, all the responses that you could give to someone, but he could not separate Bitcoin as a network, as a monetary asset, as a protocol from what he was seeing in the news about SBF and FTX being a true scam, a platform that collapsed. And I tried a little bit, but couldn't get through to him. And this is someone who's been investing for 25 years. He's been on Wall Street for 25 years. Very smart guy. Yeah. So anyway, my point in saying that is what happened in 2022 set them back a while. And there's going to be a lot of learning that needs to happen.
This is why it is. I mean, we've said this before. We're nowhere near considering ourselves experts in the space. We're learning as we go, as everyone else is. But when you are close to an expert or very knowledgeable about a certain sector, like I view ourselves as that for Bitcoin, you can recognize these opportunities in very fine detail. Like most of the people that are kind of cursory following what's going on here, even if they were interested, they're suddenly no longer interested right at the time when it's the best time to be purchasing and acquiring as much Bitcoin as you can, simply because they're just following it tertiarily. When you are in the space and you understand the fundamentals, that FTX, all of this clown bullshit that happened on top of that whole thing, nothing affected Bitcoin fundamentally. Nothing.
Yeah.
And so that is the time when you need to move in with confidence, even if you're not YOLOing with, we would never say to put your life savings in something just because, you're very confident in it. You could always be wrong. But that's the time to really up your DCA or really move in with more confidence while the market is kind of shaking.
Totally. I have 2 comments here. One is that what I'm about to say, I genuinely mean. I think when I first started saying it, it was more lip service to try to sound more resilient in the bear market than I actually was. But now that we're kind of showing signs of coming out of it, I really do view these clownish crypto exchange collapses as a tremendous opportunity for guys like us. And if we're just to go our inner circle, a lot of people we're close to. Like I was at the firehouse yesterday with a lot of dudes that are stacking Bitcoin, and they got a lot more Bitcoin over the last 3 years because of the conflation of Bitcoin and crypto. Like it is, as we say in Bitcoin all the time, but it's really true. It is the camouflage right now that will eventually wear off. You're fucking Master Chief at High Charity and you've got your cloak on, right? And it's about to go off and all these elites are about to see you, for my Halo fans out there. And the charade is about to be over. Dude, there's about to be a lot of gunfire everywhere.
I was really wondering what the fuck you were talking about with Master Chief.
My Halo fans will know what I'm saying here.
I have played it.
Point is, it has been an amazing opportunity for the last few years. This asset has been really significantly undervalued because it's been equated there. And if you're one of these people that doesn't understand this yet, especially on Wall Street, you're looking at this thing and just saying, this is a psychopathic zombie that will not die. What is it doing? And my last comment here, Josh and I were sort of economics, finance interest first, Bitcoin second. And when I first started the department and Josh and I started to get close, and even in the beginning as we discovered Bitcoin back in 2017, we were talking at that time about debt dynamics way before COVID hit. Back to you kind of talking about things changing. To me, after these 6 years, the value proposition of Bitcoin is so much more brightly illuminated than it was even when we first got in. If you look at sovereign debt dynamics, deglobalization dynamics, it is just so much more plainly obvious right now. And this is what just gets me, I try to contain myself, but just kind of absurdly bullish at times, is you've got proof of concept, more years of this thing just churning out and doing what it's supposed to, and more public understanding for why we need a decentralized, censorship-resistant, global neutral reserve asset that's digital and instantly settleable. The confluence of factors that comes together, if you're a Bitcoiner, the math can get a little weird. Are you seeing, John, more people start to really put the pieces together, or is the reality that most folks just aren't?
I get to see firsthand people putting those pieces together every week in my role at Swan. So that part is pretty unique and very cool that every single week I get to talk to new people from different industries, different ages, all across the US, outside the US. They've made their money in different ways. They have different understandings of finance and economics. They're at different points in their Bitcoin journey. So I get to see that firsthand. So on the one hand, I want to answer yes, like, it's happening, because it is happening. But at the same time, zooming out, I still think it's early days. Like, the vast majority of people are not, it's just not on their radar whatsoever. And the people on Wall Street who you would think could understand this, even like one thing I'll try to, one angle I try to play with people on Wall Street is just a portfolio diversification angle. Like, and an upside risk reward type thing. These are two concepts that should resonate with people who manage money for a living. And I laugh because it's like you can't get through to them. Diversification in terms of having an asset that behaves, it's outside the system. Diversification in the sense of, like, you don't have all your assets at SVB, Silicon Valley Bank. That's diversifying. But then also diversifying in the sense that it's not a stock. It's not subject to the same factors that are going to cause it to go up and down. It's not bonds. It's even a little bit different than gold. You would think that should play well with them, but it doesn't. And then the risk reward thing of, like, hey, if you allocate 1% of your assets to this and it does go to zero, you lose 1%.
Yeah.
Like, you're supposed to be able to understand the upside optionality here. Credit to a guy, Bob Elliott, who was just on Swan Signal with Sam Callahan. He at least acknowledged he's not a Bitcoin fan by any means, but he drew the comparison to Uber. And he was like, hey, if you would have told someone 10 years ago, you're barely ever going to take a taxi ever again because you're going to have this app on your phone that tells you where the car is, you're going to click a few buttons and it's going to show up. And you're going to do that 90% of the time and only take a taxi if you can't get an Uber, they would have said you're crazy. But that was the upside to investing in something like Uber. And he just compared it. He said, even if you don't believe that this Bitcoin thing has a great chance of working out, why not, like, dip a toe in? Right. So again, it's just frustrating because that seems all so logical to me. But even with people who manage money for a living, it's hard to get through to them with that argument.
Yeah, I have found personally that the argument that works best, or not argument, but just the example that works best for people that are most resistant to this idea, is the portfolio consisting of 99% cash and 1% Bitcoin. That outperformed the S&P 500 over the last 14 years. In any 4-year time frame that you choose. So giving them the ability to go, oh, wait a second, I can choose any time frame in this period of time and I'll outperform with 99% exposure to cash. That really turns light bulbs on for people. Because, I mean, obviously the risk reward there is amazing. I wanted
This
to
is
talk,
where messing around with Nakamoto portfolio is cool.
Yes.
It really is.
Exactly.
Just seeing the different, you plug in different things, different strategies, and going, man, there's really no way to spin this. Even if you start in at the worst possible times for Bitcoin, you have ended up ahead every single time. I think it was Callahan, or no, who was it that tweeted this? I don't remember. He's actually coming on next week, by the way.
Nice.
But somebody was just saying, from Swan was saying, if you started averaging in at the all-time high of 69,000 and you put in every day, and this was like a week or two ago, you were up 33%. So now you're probably up like fucking,
I think it's
38%
50%.
or something.
I saw somebody tweeted something similar to that yesterday, and they said, I think 50%. But either way, you're up substantially, even if you bought from the high. John, I want to ask you about the culture shock you must have experienced going from Goldman Sachs for 13 years to Swan. What kind of Christmas party is Swan throwing? How many midgets do you guys have?
Where is our invitation? Corey, where's our fucking invitation?
Well, the equivalent of Swan's Christmas party has got to be Pacific Bitcoin, which is a good time for the record.
Sure
Everyone,
is.
Shout out to Pacific Bitcoin. I would say this one's actually pretty easy and to answer in terms of like culture shock, because I was a little bit worried about it. I was like, I've only worked at one firm 13 years. It's a firm where there's a lot of type A people, high performers. And I was like, I'm not really sure what other companies at all are like, let alone this startup in the Bitcoin world. And just very pleasantly surprised really from day one with the quality of people in terms of work ethic, work product, just like super impressive. And when you looked at people who have joined Swan, they have spent time at very successful companies themselves, whether it's in finance, whether it's in tech, whether it's in consulting. So there's just a ton of people who basically came from another type A company that produced real products, had real success, and now they're doing the same thing at Swan. And just to, we were talking earlier about it's easy for Bitcoiners to trash Wall Street and people who work on Wall Street. But one thing just to give Wall Street credit for what they're really good at doing, we kind of said it, but executing in their specialty, they're very good at, okay, client comes in with a specific ask and we need to analyze everything and produce a deck and present it to them and say, here's all the things you should be considering. Wall Street is really, really good at that and doing it under pressure and under tight deadlines. So credit to Wall Street for doing a good job there. But in terms of the execution of things at Swan, like it, pretty close, like really good in terms of people getting things done, responsiveness. There's never been a time where I was like, oh, I'm working with people who just aren't as passionate as at Goldman. But I think Swan also has something going for it where everyone who's working there is deeply passionate about Bitcoin.
Yes.
So that just adds this huge motivation that not only do you want to grow the startup that you're working at, but you actually care about what you're doing. And I know it's cliche, quote unquote, make the world a better place, but like that's why that's the main reason that people are in Bitcoin, because we actually do think it'll improve not just the economic system, but all the system, fix the money, fix the world. Economic system, art, architecture, science, healthcare, food system, education, energy. When you actually believe that the thing you're working on is going to improve all of those things, that's a lot of motivation right there.
I think what you just said is very important for people to consider. If you're younger and you're thinking about a career, you don't have to work in Bitcoin, but you should definitely be doing something that you want to show up for, that you feel like you're making a difference in the world. Because I can tell you from experience, I've worked at places where I've seen the cubicle farms. I've seen these people who don't have any real dog in the fight. They're just mercenaries. They're just there because they need to be there to get paid, and they don't believe in necessarily what they're doing. They just have to keep trudging along. And those people, you spend 20 years in a gray cubicle staring at a computer screen and you don't enjoy what you're doing and you don't believe in the concept of whatever the company's aims are, you're not going to be a healthy, happy person. You're going to be a miserable, miserable person. So make sure you aim and align those things as best you can.
I think another thought here is how important company and organizational culture are. Like they're a really, really big deal. I remember I had a buddy that worked at LinkedIn in the city. This is kind of back to your Discover thing. And I'm sure there was some, back to the Christmas parties and stuff at Goldman. But I was like, I cannot believe they're spending this much money. And people like to, pick on these frilly millennials, but on coffee shops and the food and everything. But it creates a vibe where people want to come into work. They like being part of the organization. Motivation is a fickle thing. And I'm thinking about the parallels to firefighting. Different departments, morale is very different. Some cultures are toxic and unhealthy. Others are really uplifting, optimistic, and you get a lot more production. I feel like the place we're at, the culture is really healthy right now. And guess what? You get higher level customer service from your paramedics. You get more buy-in from everybody, top to bottom. And I mean, a lot of it just comes down to getting the right people. I know Swan spends a lot of time vetting everybody that gets into the organization. You got to find the right fits because, man, it's one of those things that when you have it, you take it for granted. And when the culture gets sideways, you see it right away.
For sure. Yeah. So I've just been very pleasantly surprised with the culture at Swan. Good people at the top, all the way through. If you need just like a mundane request, action for you, it's just a lot of respect for my coworkers at Swan.
Dan and I are paramedics. We see people day in and day out who have one major concern: insurance. They either have no insurance or they have some inadequate insurance that doesn't cover a thing while sticking them with a huge premium. They're worried about the cost of the ambulance and the hospital. Sometimes they refuse to be transported to the hospital for urgent needed care just because they don't have insurance. This is where Crowd Health comes in. Crowd Health is not health insurance. It's better. You contribute every month to a fund that covers you and assists other members in need. If you ever have a significant health issue, you can get crowdfunded. You pay the first $500 and then the community will step in to help you out. Crowd Health will negotiate on your behalf to obtain the best price possible. If you're sick of overpriced and underperforming insurance companies, try Crowd Health. Support humans, not giant healthcare corporations. You can try it starting at $99 per month for the first 6 months if you use code BLUE. That's code BLUE. Have you been paying attention the last few years? If so, you know one thing. Not your keys, not your coins. This is a quaint saying, but it's real. If you're not holding your seed keys, you have a Bitcoin IOU, not Bitcoin. CoinKite is the maker of the Cold Card Mark IV. This is the industry standard for holding the keys to your Bitcoin. Holding your keys should not be intimidating, and it isn't. The Mark IV makes this an incredibly simple process. You could be a degenerate firefighter and hold your own keys. That's how simple it is. If you want to create a more complex setup, the Cold Card Mark IV has you covered there as well. You can create a multi-sig using a cold card, a tap signer, and even the upcoming Q1. Speaking of the Q1, if you want to have every bell and whistle and give yourself no boundaries as far as interacting with Bitcoin is concerned, the Q1 is your signing device. CoinKite makes some of the most sought-after gear in Bitcoin: the block clock, seed plates, the open dime, and the Sats card. Everything you need to secure your Bitcoin. Click on the link in our show notes to get discounts at the CoinKite store or use code BCB for 5% off the Mark IV.
John, here's a thought from your writing that I think is especially applicable to our demographic. And you write, Bitcoin could reestablish the line between saving and investing. I want to riff on this and hear you elaborate on what you mean here about this reestablishment of these lines and why this could be so important kind of for the average person.
Yeah, so out of all the reasons I'm passionate about Bitcoin, this has got to be towards the top. And what I mean by reestablishing the line between saving and investing is that those are two distinct actions, or they should be, in a sane, sound money world. And the vast majority of people, and this is a huge blind spot of Wall Street, because you have to put yourself in the shoes of someone who sits in front of a Bloomberg terminal all day, all week. They're like, oh yeah, what's the problem about managing your personal account and becoming an investor? Well, the problem is that the vast majority of any country does not work in the financial sector. And they don't want to spend any of their time analyzing their investments and trading the market with short-term, medium, or long-term. If whatever careers you want to take, firefighters, cops, teachers, Uber drivers, anyone who works in the sciences, and every other industry besides financial services. Generally speaking, those people want to do a good job at work. And think about all the things that go into that. You had to, from being a kid, you had to do a good job in school. You had to listen to your parents. You had to get into a good school. You had to do well, graduate, convince an employer to hire you. Now you're at this company. You have to show well, earn your paycheck, move up at the company. That's a huge, huge accomplishment for anyone. And obviously not everyone works at a company. You could start your own business, whatever. But you make it to the point where you're earning a paycheck. We shouldn't throw another thing on them that says, oh, and now if you actually want to keep the value of that paycheck, you now need to become a semi-professional investor on the side. And
you
that's
need to become
effectively
a securities analyst. Yeah.
It's ridiculous. And I think one of the common retorts, like if we were having this conversation with a bunch of legacy finance people and we said this, they would be like, well, you don't really have to, you can, trust someone else to do it. And the issue with that is, and they should know better, because we even talk about this, that in the whole, this is kind of related to the efficient market hypothesis. It's just as hard to pick winning investments as it is to pick a manager who's going to pick the winning investments for you. If I could analyze the manager successfully enough to know that he or she is a great manager and is going to be knocking it out of the park going forward, like by definition, I have to have enough knowledge to know their process of what they're doing and why they're going to be successful. Then you basically have to be an investor anyway. You're just outsourcing the execution to them.
Yeah.
Yep.
So the firefighter who's, doing a good job at work, earning his paycheck, and just wants to go home and build his savings and spend time with his family should not have to do all that and be subject to these risks. And this gets into a whole conversation about passive investing and why that's been successful. The TLDR there, if someone says, well, hey, they could just invest passively, I would say, sure, that has been true for the last 10 to 15 years. You look at what SPY or QQQ has done, it's pretty nuts. It's roughly 10 to 15% on average per year what those have returned. But you have to think about what made that possible. And I would argue that look at 2008, look at 2020 as the biggest points. If we didn't get massive fiscal and monetary bailouts in both of those cases, the people who were passively investing would have lost their shirt. And one stat that I love to share with people is that the 1929 market high for the S&P 500, everyone knows that's one of the famous crashes in US stock market history. It took until 1955 for the S&P 500 to regain its high in 1929. Now that's just nominal. That doesn't include dividends. I couldn't find the stat with dividends. So if you include the dividends you would have earned, you probably make your money back at some point before 1955, but not that much before, right? So let's just say you would have had to wait 20 to 25 years for, if you invested at the wrong time, to get back in the black.
Yeah.
That's closer to what real investing should be. Now we're getting used to this environment of anytime the markets get overheated and they're supposed to sell off, Fed and Treasury come in and basically bail out the markets. That's why passive investing has been successful. So to just give the answer of oh, you don't need to know, just invest passively, you're basically telling them, hey, put your life savings on the line, thinking that the Fed and the Treasury are going to bail you out every time something bad happens.
Yeah.
Well,
you mentioned having to be your own investor. And I used to listen to Preston and Stig all the time when they did the show together. They would read a book, they would review the book. Good times. I like to go back and listen to some of those old episodes sometimes. But in that period of time from maybe 2014 and 15, I was very, very much into understanding Charlie Munger and Warren Buffett, because they based their entire podcast on We Study Billionaires, and those were the billionaires that they focused on a lot. And going down that rabbit hole, The Intelligent Investor by Benjamin Graham was a book that they recommended, because I think Graham wrote that book in the 30s or something. So I always like to try to read books or find books that are kind of fundamental. And I felt like looking across the spectrum of investing books, that was a fundamental book that I should read. And reading that book was so horrific for me, and for probably most 95% of people, because the ideas they are the actions you have to take and the modernity that is there for investing and analyzing these individual stocks, going through these ridiculous forms and like understanding the way that you have to analyze these things. If you want to get really deep in the weeds, it's just not for the 99% of people that are not working on Wall Street and aren't managing funds. Like, this is not the kind of thing you want to do with your free time. Back to your point, John, you just want to do whatever it is you do, enjoy your family, invest passively, or if you're lucky, you find something to be a quasi expert on and you focus on that more finely. There's another investor that I can't think off the top of my head, but he said something to the effect of, it's about the idea of kind of spreading out your investments or being diversified. He's like, I like to have a small, it might have been Charlie Munger, but I'm not sure. I like to have a small basket and watch it very closely. And that one resonates with me quite a bit, especially because Bitcoin makes up a decent amount of my portfolio. Having a small basket of things that you are very or fairly knowledgeable about that you can watch very closely. That's a trajectory that works for me personally.
The other problem with an increasingly manipulated fiat monetary system, to piggyback on your point, John, is that it doesn't reward the people that are actually good at investing. Like, so back to the Preston and Stig point, as Preston Pish has said for a long time, he's basically hung up the coat, the value investing coat, until the cost of capital is more accurately repriced, because the approach of actually analyzing productive companies and figuring out where to allocate capital is basically lost in an environment where people are incentivized to turn their brains off, play the Fed put, and decide where the next batch of money is going to come out of the spigot. Oversimplified, but this is the root of misallocation of capital in a flimsy money environment. And I do firmly believe that in a harder, more sound money environment, good investors are hopefully going to be rewarded properly, and not everybody, to the points you make, John, is just going to be forced to jam every single free cent they have into investments. Because it really, I think the risk component is key here. People that are passively, just buying index funds in all of their retirement accounts and everything outside their checking account, they are mostly naive. Many of them are naive to the risks that could befall them here in an environment where fixed income doesn't have an endless upward trajectory for 30 years. It's a completely different environment. I think my main message to people is you're just going to need to pay more attention. You're going to need to get more creative, might be the right word, because the playbook is not going to be executed in the same way it has been for the last 30 years, in my humble opinion.
For sure. And yeah, the way I would summarize just the saving versus investing stuff that we're talking about is being a true investor, taking on the risk of the added benefit that comes from successful investing, is a full-time job. So anyone who claims that that is something that everyone should do is effectively claiming that, hey, you should have 2 full-time jobs. And then I would just underscore the point that what I'm not saying is that investing is categorically a bad thing. I think it's fantastic. It's necessary for us to grow our economy and create, new jobs, new industries, increase our material wealth. But it has to come with the risk of loss. Otherwise, it's not real investing. So just give people the option to save their money. It's up to them if they want to take some of that money or all of that money and then take an additional risk with it to grow it further. Another way to say this is the fact that investing should come with an increased gain, right? If you just take 2 people, one person just saves their money, the other person invests it. If the other person does it successfully, he or she deserves to have an increased gain. But that fact doesn't mean that just saving money you should get debased for that action. And that's where I think things are lost. It's not a requirement for investing. Investing should give you an increased gain. Doesn't mean that saving should make you lose money.
Totally agreed. Let's get bullish here for the last section of this. I want to hear your thoughts on your crystal ball. Where's Bitcoin going from here? Things have been looking very, good, almost too good in the last month or two, where, you kind of expect to see a pullback anytime and
Yeah.
you're almost surprised when you don't. It's so
For sure.
counter-cyclical for me, though. Like, anytime that I'm like, man, and I tweeted this the other day, like, I really want to leverage some Bitcoin here. But I just know fundamentally from making bad decisions over the last 6 years that is the worst time to do it whenever I want to. And the opposite is always true as well. Like when I'm like, oh, fuck, like things are going bad and I want to sell, that's exactly the time to be buying. But I guess really what I'm asking here is over the next couple of years, we have so many things that are moving in pro Bitcoin camp right now. We've got this ETF thing kind of floating out there, very likely to happen. We've got the halving coming up in April. We've got the Fed that has paused, increasing interest rates, and they're going to level out and very likely start lowering them in the next couple of years. All these are tailwinds for Bitcoin. It seems like it could get really weird in a good way. How weird is it going to get, John?
Yeah, so I wrote down some thoughts on this and I just wanted to make sure I'm not missing anything here. So to tick through these reasons to be bullish on Bitcoin's price. Spot Bitcoin ETF is the obvious one. Looks like it's likely to have some sort of approval in the near term. General institutional acceptance, the fact that you have Larry Fink and BlackRock singing the praises of Bitcoin, it reflects a huge move forward from what we talked about that they were saying 5-6 years ago. You have the Bitcoin halving, which I know is very controversial. People have different opinions within Bitcoin about how much effect it has on price, but at least historically speaking, it has been associated with increases in price. I think there's just more awareness of the unsustainable path of the US fiscal situation.
Yes.
The amount of debt that we're adding, the pace that we're adding it at, the fact that the interest cost for the US is increasing. There seems to be more awareness about that. The Fed seems to be done hiking rates. I'm not sure if they're going to cut or when they're going to cut. Hard to predict, but for now, they at least seem to be pausing. And that's typically good for all financial assets. I think that you have to mention the significant selling pressure we saw in 2022 is now behind us, whether it was miners selling, whether it was these entities that were collapsing and causing this kind of self-reinforcing cycle of then price goes down and more people are selling. That seems to be in the past. So just the fact that we don't have that selling pressure to me is a bullish indicator.
Yeah.
Obviously, the fact that I see all these individuals and entities making new allocations at Swan, that through Swan and my one-to-one conversations with them, that's pretty bullish. If Bitcoin ends the year, let's just say it ends where it is right now, and you look at the last 10 calendar years of macro asset performance, Bitcoin's going to be at the top of that list for 7 out of 10 years. And that doesn't mean that financial advisors and institutional investors are immediately going to adopt it overnight, but you're starting to build this track record where it's just
hard to ignore.
Hard to ignore. Like you're going to have a view on it. If you don't want to allocate 0.5% or 1% to it, you're now going to have a good reason. And you can't just say because it's a tulip bubble. That doesn't work anymore.
Yeah. One other thing to add on all that is that exchange volume or the amount held at exchanges is very low right now, especially going into potentially a bull market. Typically, if you look at this through the past, like in the last 2 years, there's been a massive drawdown out of these exchanges, which is massively bullish. It seems to give the indication that a lot of people are understanding, hey, I don't want to keep this at exchanges. And if you are going to hold this for the quote unquote longer term, an exchange is not where you want to be. It seems like that's number one being understood, and they are pulling a lot of Bitcoin out of these exchanges to hold for what looks like the longer term.
For sure.
Supply diminishing.
Sure. Yeah, convicted holder base. I think that kind of speaks to this like underlying education and adoption trend that we all know is happening because of the great content you guys put out, the conversations you guys have with people one-to-one. Like we know that's just kind of building over time, and you can see it through metrics like that. Last two things on the list of reasons to be bullish for Bitcoin. Argentina, I would say, is at least worthy of a mention. No, I'm not saying that they're going to become the next El Salvador and declared to be legal tender, next week. Not saying that, but just the fact that you have a libertarian presidential. Now he is the president. I was going to say candidate. It feels good as the candidate for so long. He got elected. He's an outspoken critic of central banks. He has said favorable things on Bitcoin, even if they don't make it legal tender. They're 45 million people, I believe, is their population, 23rd largest economy in the world. That's going to spur some, at least, awareness of Bitcoin. I think it's worth mentioning.
I'm more excited for the potential that he actually kills the central bank there and see what kind of aftermath comes out of that, because that is a move in the modern world. I can't think of the last time something like that's happened. The world's going to watch what happens here very closely, because this whole mysterious like central bank has to control things. Otherwise the whole thing just fucking flies apart. And, at the speed of light, we're going to find out, and the whole world's going to pay attention to what exactly happens and shakes out of that, because if they can move and be into the positive territory after having removed the central bank without, we'll see if he actually survives that himself. Somebody might have some other ideas for him, but that's what I'm interested to see, what happens after the central bank. If they actually do kill it, where does this thing go in the next 3 to 4 years? And I think a lot of people are interested in that.
Yeah, I mean, having seen Javier Milei talk, it's very obvious he's going to fuck around.
I hope
we're going to see what happens when he finds out.
I hope he brings the chainsaw into the central bank and starts cutting desks in half. That would be pretty epic.
I agree, though. That's a good point to bring up. So much skepticism towards any politician on the planet from the Bitcoin community, but you're talking about a G20 country and just a big move, evidence of a big move in global public perception and discourse and understanding about inflationary dynamics, fiat currency, and debt problems. It's a pretty big deal for sure.
Yeah, it's worth mentioning at the least, and seeing what happens there. And then the last one on the list is just all the technical innovations that are happening on Bitcoin right now. And this is like a wide range of things you could talk about here, whether it's like ARC, Miniscript, covenants, like things that are just going to make the user experience better and more broad. But even experiences like anyone who's coming up with better experience for hardware wallets, making it easier for people to take self-custody, better Lightning wallets, abstracting away the complexities behind the scenes, multi-sig collaborative custody, just making it less daunting for people to interact with Bitcoin. We all know that there's these many companies working on this. So that to me is another positive. And that actually makes me think to share kind of this overarching view that I have about Bitcoin, which is, if you were to ask me my degree of confidence as to Bitcoin becoming sound money in the sense that it's at least a better version of gold, I would say high degree of confidence that happens. Excuse me. And I would remind people that right now, Bitcoin is about 1/15 the market cap of gold. So tremendous upside, even if it just becomes a slightly better version of gold. But I probably speak for many Bitcoiners when I say this. We don't want that to be the ceiling on Bitcoin, to just be a slightly better version of gold. Ideally, you want 8 billion people to be using the Bitcoin unit at the very least, if they're not using Bitcoin on chain, for everyday payments. That's the ultimate future for Bitcoin. And we talked earlier about, being open to things and not being so fixated in our views and being open to how things might change. I think we as Bitcoiners do need to be open to how will Bitcoin scale to 8 billion people out there, because it's not 100% clear roadmap as to how that happens. People have different opinions for it. So that's something that Bitcoin scaling is like a rabbit hole of its own. There's obviously people who are much further down that rabbit hole than I am. But that's kind of how I think about it. It's not as if I'm like worried about Bitcoin's future again, because Bitcoin is still 1/15 the market cap of gold. But now I'm just talking like long term. What are things to look out for in Bitcoin's future?
Before we let you go, John, I really do want to hear you explore this even quickly, because you've written a piece on it, and I think it's a common theme for a lot of skeptics who have some understanding of markets. It's this idea that what makes Bitcoin so much different than gold? You're saying it's going to really make inroads in terms of moving us towards sound money. Why isn't it going to suffer the same fate as gold? What's your answer to somebody that has this rebuttal?
So I'm trying to write a piece on this, and anytime you put pen to paper, you really organize your own thoughts, and it just helps a lot. So I'm in the process of writing that now. But what I would say is, I think Bitcoiners are aware. If you just ask people, why is Bitcoin better than gold? Most Bitcoiners would give you the answer, which is correct: better portability. But when you really start to examine what that means, there is a lot of depth to look at there. Like, what exactly does better portability mean? And what does it protect against in terms of potential capture by governments and central banks? Because that's ultimately what happened to gold. It got captured by governments and central banks. And then, whoops, one day you have this monetary system where the base layer is gold. Yes, we're not exchanging gold, but it was the base layer. And then they say, you know what? We don't really need that base layer anymore.
Right.
We're literally just changing the definition. A dollar used to be
rugged.
describable in gold. And now we're saying, by the way, we're taking that away. You guys are still going to use dollars, but there's no more gold. We do need to be cautious and say to ourselves, okay, let's make sure we're not going into a situation where Bitcoin just becomes another gold. So it's really exploring that portability. And the obvious one is, okay, if you had to send a large amount of money, let's call it $10 million to another person across the world, and you had to do it, you could choose to do it in Bitcoin, or you could choose to do it in ounces of physical gold. Which one are you going to choose, and why? Which one's easier?
Yeah.
The answer is obvious. It's easier to do it with Bitcoin. But for this example, let's just say that the cost, just the transaction fee, is the same. Let's say on-chain fees have gone crazy, right? And it's $50,000 to send $10 million worth of Bitcoin, just for this example. And let's also say it costs $50,000 to send the gold. So the monetary cost is exactly the same of the two. You would still easily choose Bitcoin because you can do it digitally. You can do it from home. You don't have to hire a team of security experts to move it. It'll settle in an hour. You don't have to worry about the execution risk of sending all the gold. So just even if we only have plain Jane on-chain Bitcoin, it still reflects this huge advantage over gold. And then I think you start to add in these other layers, whether it's Lightning, whether it's Arc, whether it's Covenants. And then you start to say, okay, I think this system is starting to get pretty resistant to centralization and capture. So that's what I'll try to be exploring in that article. But even just thinking about it, even if you don't say we have Lightning, we have Arc, we have all these other innovations, there's reasons to say why Bitcoin would be significantly more resistant to capture than gold.
In the other obvious thing to throw in there, we haven't felt this yet because we're not to the next epoch, but Bitcoin is significantly more scarce than the scarcest commodity in existence, that being gold. And we're going to feel that more and more as halvings march on. Humanity has not yet grappled with the implications of absolutely algorithmically scarce commodity. Flooding in, supply constraints are not something that you have any comparison for. And that could do things to price that surprise you even when you're used to looking at how scarce something like gold is.
Yeah. Yeah, it's the real, that's what's so ingenious about the way this thing was designed. Whether or not Satoshi saw this far into the future to realize like the implications of each of these epochs flooding people into the market because they're excited by the price. I like to think that he probably was, but man, what a fucking genius way this was all set up. It's just astounding when you really think about the way that the incentives are aligned to just draw people into this thing.
For sure. For sure. There's one more thing I wanted to share with you guys.
Please do.
It's a stat that it talks about things that happen on Wall Street and just how difficult it is to predict the future, but then also how obvious some things look in hindsight after it's played out.
Yeah.
So this is a stat that I came across when I was at Goldman managing portfolios of corporate bonds. And we would inherit portfolios from our clients sometimes. So we had to manage it going forward, but we're not the ones who built the portfolio. And there was a client who gave us a portfolio that had a bond in it that was JC Penney 2097. So you heard that correct. That means JC Penney issued a bond that matures in the year 2097.
What year was it issued? Do you know?
1997.
So
they issued a 100-year bond. about 7.5% was the coupon. Bonds are issued at par. So, issued at $100, you get a 7.5% coupon for 100 years, unless the company goes bankrupt. So I looked at that and just said, wow, that's amazing. In 1997, people actually thought JCPenney was a good bet to be around for 100 years. And I looked at my Bloomberg to see the industry and say, what were other bonds that were issued in 1997 for 100 years? And FedEx issued in 1997 a 100-year bond, and about almost exactly the same coupon, right around 7.5. So I probably don't need to say this, but JCPenney has since declared bankruptcy. The bond was trading just kept going lower, 80, 70, 60 cents on the dollar. Whereas FedEx, people still believe FedEx will be around until 2097. But in 1997, the market, all these sophisticated investors thought that those two companies had the same prospects for being around 100 years from now. That seems ridiculous to us, but it wasn't. It was not obvious at the time. So I just look at that and say, it probably feels obvious to us that Bitcoin has this very bright future ahead, but to most people, they're not looking at it, and it might look obvious in hindsight, but it's not on most people's radars.
That is 100 years. It's a long
I can't help myself, but the flip
time.
side of that is also not fun to think about either. We might all be completely fucking wrong, and this is all a clown show in 100 years, but I very, very much doubt that. I just had to throw it in there because
Totally possible, though.
Just don't know, man.
Gotta have that humility. Bitcoin could sound as dumb as JCPenney in 30 years.
100 years is a long time. That's a long takeaway from that.
Sure is. John, this was fantastic, man. Really enjoyed talking to you. Love your pieces. We'll obviously give an intro to you in the episode intro, but talk to us about what you're up to, Swan Private, anything you want here as we close.
For sure. Real quick, Swan Private, that's our high net worth offering. So just one-to-one service for people who are looking to get allocated to Bitcoin. The reality is that some people may have made their money in other industries. They could self-teach and learn everything about Bitcoin they need to, but some people don't have the time or energy to do that. So we're kind of like an advisor and a consultant for them on their Bitcoin journey, and people seem to find it very helpful. People can find more of my content and thoughts on Twitter. I'm at John_@_Swan. And I'm going to try to be more active on LinkedIn soon, just because I have a huge network of TradFi people there. So I'll be sharing more content on LinkedIn. And every now and then I'll try to write an article that I think is helpful for the Bitcoin community. So that's what I'd say there.
Awesome.
Appreciate you, man. Thanks so much.
Thanks for joining us.
Congrats on the new baby. Best of luck. Keep grinding. It's worth every minute, which you've already made the realization of, I'm sure.
For sure. Thanks, guys. Love talking with you.
See ya.